All right, let's dive right into this explainer. If you've been eyeing real estate in the Pacific Northwest, you already know the market here is incredibly dynamic. But hey, before you get too attached to that gorgeous craftsman in Portland or that scenic property out in Bend, we really need to talk numbers. Today, we're going to show you exactly why an Oregon-specific mortgage calculator is absolutely your most powerful tool before buying a home and how it acts as a rock-solid blueprint for your financial future. $497,500. That massive number is the median home value out here in the Pacific Northwest. It completely establishes the very real financial threshold you're going to face as a prospective buyer. I mean, it's a huge commitment, right? When you're dealing with a $500,000 asset, guessing your monthly payments simply isn't an option. You absolutely need precision to navigate the local economy effectively. So, before you even step foot in an open house, we have to confront a pretty emotional question. Is your Oregon dream home actually affordable? It's so easy to fall in love with a property, but true financial peace of mind comes from knowing that the home you love isn't going to stretch you beyond your means. A specialized calculator doesn't dash your dreams. It actually grounds them in reality so you can buy with absolute confidence. Let's move on to Section 1, the Oregon housing reality.
Okay, here's the current landscape. You're typically looking at a standard credit score requirement of 620, though FHA loans might actually allow for a 580. Down payments can range wildly too, from the traditional 20% down all the way to 3 or 3.5%, or even 0% for eligible VA and USDA buyers. And the whole process? Well, it takes about 30 to 45 days from application to closing. Now, while those baseline numbers give you a great starting point, relying on a generic national calculator to crunch all these variables will actually set an Oregon buyer up for failure. Let me explain why.
And that brings us to Section 2, why you need local data. Because here's the thing, if you use a generic internet calculator, it's just relying on national averages for property taxes and standard estimates for insurance. But an Oregon-specific tool that uses county-specific tax rates and factors in real regional risks. Think about it. Oregon has some very unique insurance considerations, especially in areas prone to wildfires or seismic activity. A generic tool completely ignores these local realities, which could absolutely derail your budget when you finally sit down with a lender. Plus, here is a massive Oregon-specific advantage: the property tax cap. Oregon law actually limits how much the assessed value of your property can grow each year to just 3%. A local calculator automatically factors this cap in for your peace of mind, meaning your long-term tax estimates become incredibly predictable. In states without these limits, taxes can skyrocket literally overnight. But here, your customized tool helps you project your true costs years into the future. Moving along to Section 3, uncovering hidden monthly costs. When you break down your monthly payment, you instantly realize that the actual loan amount, the principal and interest, is really just one slice of the pie. Oregon property taxes, homeowners insurance, and if your down payment is under 20%, private mortgage insurance significantly inflate your true cost. Using an Oregon-specific calculator allows you to plug in all these distinct variables so you aren't blindsided by a monthly payment that's hundreds of dollars higher than you expected. It all boils down to this idea. Financial peace of mind comes from knowing exactly what you can afford before you sign on the dotted line. You're using the calculator as a shield against expensive surprises. By taking the time to model these unique Oregon costs, you maintain your budget's health and keep your new home a source of joy rather than a massive point of financial stress. Let's hit Section 4, testing your loan scenarios. It's a classic tug of war, right? Building equity fast versus keeping your monthly budget flexible for emergencies. When you run a 15-year loan through the calculator, you're going to see a higher monthly payment but significantly lower total interest and much faster equity growth. But if you swap that to a 30-year loan, your monthly payment drops, giving you really high budget flexibility even though you do end up paying more interest over the long haul. As financial planning experts will tell you, the most effective way to manage debt is to align your repayment schedule with your long-term financial stability, rather than just endlessly chasing the lowest interest rate. A 30-year term might cost more in interest overall, sure, but it could literally save your daily budget. The goal isn't always to get the absolute lowest interest paid over a lifetime if it starves your monthly cash flow. Your Oregon calculator is essentially your laboratory where you can test out these exact scenarios. And it is absolutely staggering to see how a seemingly tiny 1.5% bump in interest on a $400,000 loan adds over $140,000 in total lifetime interest. Just think about that jump from 6% to 7.5%. The monthly payment goes from roughly $2,400 to nearly $2,800. By actively testing these current rates in your calculator, you can see the real-time impact of market trends.
It really helps you decide if you need to lock in a rate right now or maybe work on improving your credit score first.
That leads us nicely into Section 5, Beyond the Monthly Payment. Let's take a quick philosophical breather here. Henry David Thoreau once said, "The price of anything is the amount of life you exchange for it." And that is so true for real estate. It's a great reminder that home ownership shouldn't cost you your entire lifestyle or wipe out your emergency savings. A house is a huge part of your life, yes, but it definitely shouldn't consume every single dollar you make.
Adding these extra hidden costs into your calculations is exactly what ensures your new Oregon home remains a place of happiness. For starters, you absolutely must budget an extra 2 to 5% of your loan amount just for one-time closing costs, things like appraisals and title insurance. And once you actually have the keys, well, the Pacific Northwest climate means you need to set aside income for things like gutter cleaning, HVAC repairs, and roof replacements. A solid emergency fund keeps those unexpected surprises from derailing your mortgage payments, and a great calculator helps ensure you actually have the monthly cash flow left over to cover all of it.
All right, final section, Section 6, Confident Next Steps. Following these 3 steps will literally transform you from an anxious browser into an empowered, highly confident buyer ready to take on the Pacific Northwest market. Step 1 is exactly what we've been talking about. Calculate your budget using an Oregon-specific tool. Step 2 is getting pre-approved, which proves to sellers you're serious and backed by a lender. And Step 3 is connecting with local experts who can actually make these numbers a reality. Connecting with specific local institutions. We're talking places like Umpqua Bank, On Point Community Credit Union, and Oregon Pacific Bank is absolutely vital. Why? Because they intimately understand the nuances of the Oregon market. They know all about state-specific down payment programs and regional insurance requirements. You can take the highly accurate scenarios you just built on your customized calculator directly to them, which saves both you and the lender a massive amount of time in turning that scenario into a formal pre-approval. So, are you ready to calculate your financial future before signing on the dotted line? Ultimately, taking just 10 minutes to run your personalized numbers today will dictate your financial freedom for the next 30 years. You've seen exactly why generic tools fail in a unique market like Oregon's, and you now know how to uncover those hidden costs of property taxes and insurance. The data is out there, and the tools are completely free. So, what's stopping you from calculating your financial future right now?